back to my channel A-Level Guide. Now we will continue with the paper May June 2021 variant 3.1. The first question is related to manufacturing, and here's the basic format that you need to learn before you step into the question. Alright, now so they've stated that GE Limited manufactures luxury sofas. In 2020 it also started trading in standard sofas. So all the information has been provided. A tip for solving a question easily is that you can number the figures as well as the information in front of it, so that you're not mistaken when you're writing down the figures in the manufacturing or the income statement. Alright, next they said the markup on cost of production for 2019 was 20%. It was increased to 25% 2020. We all know that markup is placed on cost of production. So when there's costs involved, we use markup. But when there are revenues like sales, we use margin. So there's a difference between markup and margin. You need to take this into account when we're making provision for unrealized profit account, or we're calculating them even the increase or decrease. So markup and margin are very important, that you realize which is supposed to be applied on cost of production and what on sales. The next step, we have inventories of raw material, work in progress, finished goods. The selling and distribution cost have been given. You need to adjust these. So now they said that selling and distribution cost include the transportation of raw materials and installation of new machinery. So transportation of raw materials will be included in the manufacturing account as it is related to raw materials. And then we have factory rent have been included in administrative expenses. The factory rent is related to the manufacturing account, hence it will be subtracted from the administrative expenses and recorded in the administrative in the manufacturing account. Machinery is to be depreciated at a rate of 20% reducing balance method, and all this is provided. Now we'll jump on towards the question, and first they've asked us to make the manufacturing account. So now let's follow the format, put the format on your side, follow that and make the manufacturing account side by side. Alright, now so according to the format, the first thing that we're supposed to write is direct material. Under direct material, we record all these which are related to the material and supposed to be recorded in this related to the factory. So first of all, we have the opening inventory of raw materials that is mentioned on the 1st of January. We have raw materials amounting to 66,000. So we will write the opening inventory of raw materials. We know that this is related to raw materials is basically 66,000. We're going to add purchases. So purchases have been stated of raw materials as 292,000. So we are going to also write that down. Also, we according to the format, we also add carriage inwards and less return outwards, not in this case but in the income statement. So we're going to add carriage inwards, and if you look into the information, carriage inwards will be recorded here. This is a very important thing in manufacturing accounts. So we're also going to add carriage inwards, don't forget this. So it's an important element, and hence it is 7,800. After you're done with this, you're supposed to subtract the closing inventory. So that is the format, and you're supposed to subtract closing inventory of raw materials as 72,000. So this was very basic. It's just like what we do in the income statement of a trading account, and it's the same like this, only the raw materials are included, carriage inwards of manufacturing account. Hence you get the answer as 293,800. So you are supposed to write it here and label it as cost of raw material consumed. So that is how you're supposed to write this. This is the proper format for the direct material part. Now we'll move on towards the next part. Now the next part we have is the direct labor part. Okay? We have direct labor and direct expenses. So if you look into the information, they stated an amount of direct labor as 200,200. So you're supposed to relate all the direct labor as 200,200. So you have been recorded direct labor. Also we record direct expenses. If you look into the information, we do not have any direct expenses. So this part is basically related to the direct things that have been related, direct production cost related to the manufacture of goods. Hence we label, if you do not have any direct expenses, you just label it as prime cost, and you total the expenses as 494,000. So basically this is the section that you're supposed to make, and it is known as prime cost. After the prime cost, we have indirect expenses that are being related to the manufacturing account. So we write indirect expenses. If you look into the information, they themselves have written indirect expenses as 108,000. Alright, the next thing that we take into account is the factory rent. So they said factory rent of around about 48,000 was included in the administrative expenses. As it is related to factory, you're supposed to record it here as factory rent and 48,000. This 48,000 will also be subtracted from the administrative expenses as it is related to factory and not the trading section of the business. The next step we have is the depreciation of machinery. So all the machinery part is done in the factory. Factory is basically related to the production of the goods and services. So machinery, any purchases that you make, any expenses, factory rent, electricity, what is being used is related to the factory trading section, and hence it will be recorded in the income statement of this. So depreciation of machinery will be recorded. They said 20% reducing minus method will be used. So we have 325. You're supposed to subtract 155, the depreciation. This is the cumulative depreciation, this is the brought down, and you're supposed to apply 20%, hence it is going to be 35,000. So total of the indirect expenses will be 190,000. After the calculation of the indirect expenses, the total is 191,000. We had prime cost of 494,000. We're going to add both and we're going to get the total figure as 685,000. Now we'll move on towards this format. According to format, we're going to add work in progress less the closing work in progress. There are two ways. Either you add this in this and then subtract this, or you collectively do this and you get the answer as 11400. You're going to subtract this, and the total of the cost of the raw material consumed will be 673,600. So this is the cost of production that you are supposed to have. And as I mentioned earlier, markup is applied on the cost of production. Hence, we will calculate the factory profit. Now, after the calculation of cost of production, the format requires us to calculate the factory profit. Factory profit is 25% on the cost of production, and in 2020 the markup has been increased to 25% and not 20%. So 25% to 6760 will be 168,400, and now we get the transfer value of goods and services that will be transferred to the income statement as 842,000. So if this amount is given, you will be applying margin on it. If cost of production is given, you will be applying markup on it. So this is the main difference that you need to follow. Alright, so now after the manufacturing account, we require us to prepare the provision for unrealized profit account. For this, I've already told you, transfer value pay we use margin, and for cost of production we use markup. So according to the information given, they have given opening and closing inventory at transfer price. Hence, we will use margin. Now in the question, they've only given markup. Now we need to convert the markup into the margin. So markup into margin. So the formula that you can remember for conversion of markup into margin is A over A plus B. For instance, A is 20, going to add 20 plus 100. So B is 100. So 20 plus 100 is that you're supposed to add, and you get as 1 over 6 margin. So for the brought down, what we are supposed to do is the transfer price is 126,000. We are going to apply margin, which is 1/6 we have calculated, and it will be 21,000 brought down. So we are going to use opening finished goods inventory to calculate the opening provision as 21,000. For in some questions, the provision for unrealized profit has been given for the previous years. You calculate for this year, you get the difference. Either it is increased or decreased. For this, no information has been provided. We ourselves have to calculate. We have been given markup. We are going to convert it into margin. We are going to apply it. We get the brought down. For the carry down, we have been given the amount as 150,000. And we know in 2020, the market increased from 20% to 25%. Again 25 plus 100. It is round about 1/5. So into 1/5 will give you 30,000 carry down. You can now find the difference. It's 9,000. So income statement will be 9,000. If the income statement is being credited over here, the provision for unrealized profit is credited. Income statement is debited. Hence, there is an increase in provision for unrealized profit. At the start, it was 21,000. At the end, it is 30,000. So, the 9,000 increase will be recorded in the income statement as an expense. If, for instance, 9,000 had been recorded on the debit side, it would be treated as an income in the income statement. So, hence, this account has been prepared. You were supposed to find out the expense. After the preparation of provision for analyzed account, we were supposed to make the luxury sofas and standard sofas trading section account till the gross profit only. So any account of expenses or provision for unrealized profit is not required. Hence, we're just going to make like we do. Sales are recorded. We are going to subtract the cost of sales from this. Cost of sales include the opening inventory. So for luxury sofas, we do have the opening inventory as 126,000 as the finished goods inventory. For standard sofas, we do not have because we purchase it from the local suppliers and we do not have any opening inventory for that. We're going to add purchases. For this, we will record purchases, which is the transfer value of goods, because luxury sofas are what we prepare, what we manufacture. Hence, purchases will be the transfer value which we calculated in the manufacturing account as 842,000. And for purchases for standard sofas is given as 158,600. Going to add both and you're going to subtract the closing inventory. Again, for closing inventory, we have been given at finished price, because in income statement we recorded at the finished price value 150,000, and for this we have been given as 16,000. So all the information have been stated. You're just going to incorporate them. For this we need 842,000. This was a thing that was required and important, and these were to be recorded at the transfer price. Hence, the answer of the cost of luxury sofas will be 818,000. So this is basically the cost of sales value, and this is going to be the cost of sales value as 142,600. Now we can calculate the gross profit which was asked, and hence it is 126,000 and 3,400. So all the information was given. You were just supposed to put down them in the format and calculate the answers.